Real estate offers so many great opportunities and a way to really diversify your portfolio that it's amazing how few people really know about this opportunity.
Welcome, everyone, to today's Hero Capital Raising Show. I'm your host, Tim Mai, and today I have a super special guest on the line with us, Mr. Gary Lipsky. Gary is a multifamily syndicator who has done over $500 million worth of real estate transactions. He's the president of Break of Day Capital, whose mission is to positively impact the lives of their investors and the communities in which they invest through the highest level of transparency and fiduciary responsibility. And Gary is the host of the Real Estate Asset Management podcast and the best-selling author of Best in Class. As a successful entrepreneur, Gary has built several companies, co-produced 3 independent films, and started a nonprofit. That's amazing. And he has personally, with his latest closing, he has personally raised over $38 million. So let's give Gary a big welcome, y'all. Woo-hoo! All right.
Thanks for having me, Tim.
Thank you. Yeah, we talk a lot about capital raising on this show, but the fact that you have a podcast on asset management, I would love to dive more into that as well, because a lot of people don't realize that's probably the hardest part of the business. The capital raising, we get a lot of, because we're on the front end of it, right? We get a lot of exposure, and it's a topic that people can they want to learn, but they don't realize that the capital raising is nothing without the asset management that backs it up. If you can share with us a little bit about you, how did you get into this syndication business? And then especially, how did you came to specialize on the asset management side?
Yeah, I was an entrepreneur, like you had said, pretty much my whole life, doing businesses, even when I was in high school. And I wanted that financial freedom. I wanted that control. And I started investing. Even my first house I bought for my family in 2002, I didn't look at it as my forever home like most of our parents have. I looked at it as an investment, and I carefully studied neighborhoods and bought a house that I could find value. And we opened up the kitchen. I converted the garage into an office that I could rent out to my company. And I was very specific on what we bought. And that really fueled the love for real estate and finding value add. Little did I know that I would eventually hold hundreds of millions of dollars of real estate down the road, but that was the start. And eventually I bought another single family home and another one. And when I sold the business at the end of 2016, I got into real estate full time. And that's where I couldn't have dreamed at that point where I would be today. But by by spending so much time and energy in my education, because I wanted to do it right and I wanted to do it for the long haul. It wasn't for to make a quick buck and just jump into something. So I really spent time educating myself and investing in other people's deals to figure out what were they doing right and what were they doing wrong before I started doing my first deal. So that was the beginning of my real estate journey. And you had asked about asset management. So because I had that business experience, that was the strength of mine. That was my superpower, running
Mm.
businesses. And that's what asset management is: coming up with a business plan, executing on that plan, dealing with curveballs and pivots and things thrown your way. Nothing goes perfectly, and managing people. And so that's what I leaned into.
Gotcha. That makes a lot of sense. So, how many deals have you been involved in now? How many have gone full cycle?
As an operator, I've never raised for anyone else. We've always done our own deals. We've done 11 deals, 2 in Phoenix and 9 in Tucson. And we've had 3 go full cycle. They've all gone, we've sold them all within 2 years, and averages 61% IRR. Now, I can never promise that, and I never would expect that number to stay that high as we do more and more deals. We bought at the right time in the right markets. We executed the hell out of the deal, and we certainly took advantage of market timing.
Right. Yeah. So here in 2020, is that still your 2 primary markets, or you looking to expand into other markets as well?
Yeah, the last 2 years we've been looking in Albuquerque and Las Vegas and the Denver suburbs. So before we buy any deal in a market, we're acquiring thousands of data points. We're underwriting a lot of deals. We track everything, what they sell at, what was the median household income, what was the average rent. There's all these different things that we're looking at so that when we have a deal that we really like, we can look back at our data and say, hey, is this a deal a good or is it bad? I'd love to open up and get into another market, but it's within our concentric circles. There's plenty of really good markets, but we want to be in areas where we can visit on a consistent basis, build strong broker relationships. So we can't be everywhere. We want to be in a few markets and be really strong in those markets.
I see. Now you're in California, and so with all of your properties being in Phoenix and Tucson, do you have boots on the ground? I assume you have a whole team on the ground.
Yeah, I have 5 staff that work for me that are in the Phoenix area, and I'm out there very often. I'm out there probably once a month. It's an hour flight. I can see all my properties in a day and probably have time to see new properties and meet a broker for a coffee or lunch as well. So that's the beauty of having that, being in only a few markets that you can get to it and bang it out. Sometimes I stay overnight, sometimes a few days, sometimes it's 6 a.m. flight there, and I'm back by dinner time.
I see. Do you guys do property management as well, or no?
No, that's a question I get asked a lot. Do I want to be vertically integrated? And my answer is no. My old business, we had over 700 employees and 700 independent contractors, and it was an HR nightmare. We were always understaffed. And as an operator, I want to stay more nimble. I know certainly a lot of people want to be vertically integrated. I don't. I want the company that we use in Tucson, all they do is Tucson. They've been there 35 plus years. I can rely on their data. So I've got right now I own 6 properties in Tucson. And so I'm looking at their data, which is a little over 50 properties. So I'm able to use that data. If I only had 6, my 6 that I'm looking after, that's very limited in that data. So I want to rely on their expertise who have been there for many years. And if I don't like that market down the road, I could change to another market, not have to start over basically or try to move everyone. So that's our
I see.
preference. We want to be solely focused on what we do best.
I see. So your 5 team members that are in the Phoenix area, what role do they play?
So I've got an investor relations manager, an investor relations director. I've got an operations manager. She's an executive assistant. She does a lot of different things for our team. In October, I hired an operations director, and he's been great on really working on our processes, high level stuff. And I want to be able to hand off some of the legal stuff that I have to deal with so I can focus on raising capital and deal making, which I do best. And then we have an acquisitions and asset manager and someone that does like special projects for us. That's our team right now. And as we take on more assets, we'll continue to grow as needed.
I see. Now you visit your properties once a month. Does the asset manager visit more often than that since they're there?
Yes, some as needed. If we have an investor going, if I'm not able to make it on a consistent basis for one reason, he'll go. But it's typically once a month. And sometimes we'll go announced if we want to do stuff with our regional, and other times we'll go unannounced and on different days so we can see if the property is where it should be without them knowing that we're coming and making it sure that it's nice and all the trash is picked up. We want to catch them doing something good. We don't want to necessarily catch them doing something bad, but we've got to check on different Friday afternoon, are they there? Monday morning, are they there? Different times, different parts of the week to make sure it's operating at the best of it that it can.
I see. So myself and quite a number of people on this call focus primarily on the capital raising side of the business. And it is so important for us to find operators that have very strong asset management, very hands-on. What are some of the key things that we should look for in that type of operator that have that like asset management is their superpower. Um, so that yeah, so what can we look for? What kind of questions should we be asking to identify that person?
Yeah, I think it's very important if you're working with someone, are they sending out a budget to actual performance on a property on a monthly basis? If they're looking at that consistently, that's a really good sign. And not every month do we beat our pro forma. There's months that we struggle. There's ebbs and flows to a property. If there's something going wrong, we communicate that to investors and say how we're going to fix it. Those are some of the things that you want to look for. You want to look for them consistently having calls with their property manager. We do it every single week. We bang out all of our properties. Every 15 minutes, we have a call scheduled and we bang out all of our properties. Newer properties will take longer. Properties we've had for a longer time where we've executed the business plan, it'll be shorter. But that consistency is key. So you want to make sure the whoever you're partnering with is doing that, is going through the financials. Communication is key. No one expects perfection, but they do need that. You need to have work with someone that's doing that on a consistent basis and visiting their properties. There are owners and operators that I'm friendly with that I know that don't go to their property. Maybe it's every 6 months because it's far away or they're busy or they're worrying about capital raising. And you can't do everything. Who's your asset manager? Some deals, 20 people on there, and they're like, oh, we're all asset managers. Who's the main person? When we have a call, I invite all of our partners on the call, but only one person is talking, and that's my asset manager. Everything has to flow through him so that a property manager and a regional isn't getting bombarded by all these different people. We're all on the same page. If there's an issue, we could talk about it offline and not have everything bothering our regional and our property manager so they could focus on their job.
Okay. Let's transition to in capital raising, investor relations. What are some of your so in your business, are you the primary person that handles the capital raising side of the business?
I used to be, and now I hired Joe towards the end of 22, which I should have hired someone earlier as we continue to grow. And then I added another person in October of 2023. Again, things I should have invested more in earlier, but as I continue to grow and whatnot, I'm investing in that. Just like you have to invest in asset management, you have to invest in your capital raising as well.
Okay. So share with us what are some of the, best, what have worked best for you when it comes to capital raising?
Definitely be consistent on emails that you send out and educate your investors. It's not, and one of my biggest mistakes when I started was imposter syndrome. I wasn't like, who am I to send out an email when I haven't done a deal yet, when I wasn't building my email list? So I was horrible at capital raising in the beginning because I wasn't doing that consistently. And I sucked less and less the more as I got better and better at it. But sending out that email, providing value for investors, talking about what you're doing is key. And so I play beach volleyball. I've got a number of friends that have invested because we talk about real estate when I'm playing volleyball. People I play basketball with have invested, friends, family, and it's not like I'm selling them. All I'm doing is talking about what I'm doing, and that's how investors come to you. And referrals is key too. If you have a referral from someone, they're just teeing it up for you because that person is ready to go. Typically, there's that lack of fear where you might have with a new investor. They already know and trust you without having really even met you because of that referral. So work your referrals is huge.
I see. What about like marketing, social media, things like that? Do you do anything around that?
Yeah, we post a lot on social media, and that's something that we have to get better at. I would say it's investors will find us for a number of different ways. I a lot of conferences. I have my own podcast. I speak on other podcasts. It's all these different things that help. Our social media game is okay. I think there's a tremendous room for improvement, more interaction and whatnot. And we're working towards that and focused on how we can improve. We're always assessing what's working, what's not working, and how can we improve upon it. Kaizen is one of our core values, and that's the only way you get better, to be honest with yourself. What's moving, not moving the needle.
So, how long have you had your podcast?
So we've done 180 episodes. So it's a little over 3.5 years. So I think the first 150, it was strictly focused on asset management and then small bites. And that actually helped me get educated as well. Like I brought on people that I wanted to learn from, and it really rocket fueled my learning curve. And then we've transitioned more. It's now called the Real Estate Investor Podcast because now we're more focused on that raising capital piece. And so we've made it more broader and bringing on other guests that will help feed us that as well.
That makes sense. Yeah. Which, because I was going to ask that, I was curious to the topic of asset management. Did it attract a lot of LPs at all, or mostly operators?
I think a lot of wannabe operators and some LPs, but what it did allow us in the beginning was create a niche. We created a best-selling book called Best in Class. We did a summit on asset management when no one was talking about it. All the gurus out there teach you how to get your first deal, but no one taught you what to do after you got that deal. And so there was value in that. And so I was able to get on podcasts and conferences because I was talking about asset management. But at some point, yes, I had to transition to something that's going to be more of a lead magnet that's bringing in LPs.
I see. Okay. And so when did you transition to over to the Real Estate Investor podcast?
Yeah, I would say within the last 6 months or so, when we did a hard look at it and we felt we ran its course on asset management. Now we still talk about asset management. It's still one of our main topics, but we wanted to open up to other asset classes because it was very hyper focused on multifamily. And we brought on some full-time investors and just to hear their story and their journey. And so I thought it's not one thing that brings an investor, but I think that's it's helping us bring in more investors.
I like that. Okay. And then your book, have you found that to be a good lead gen for you in terms of attracting investors, or at a minimum, like a credibility kit with investors?
Absolutely. It's a great credibility kit. And it's not one of those like 30-page ebook kind of things. It's a legitimate, I don't know, 160 pages in there and whatnot. And it also helps bring me partners. I've had people that have wanted to raise for me because of the book, because of they've seen me out there. And so that's been a huge part. So it's not necessarily me raising more capital, but bringing on people that want to raise capital for me or partner up because
Mhm.
of that specialty, that niche that I've created.
I like that. Talking about people that want to raise for you, I didn't realize this, but I'm starting to meet more and more of investment groups. They're different from capital raisers. So like I've found that some of these group owners, it's almost like they have a bunch of friends that come together and go on deals together. But they do bring a pretty significant amount of money to the table between them. Have you worked with a lot of those kind of groups?
Yeah, we're always trying to find blue oceans. We're all chasing the same capital. How do you differentiate yourself? How do you find groups that aren't necessarily part of this, not seeing as many opportunities? So we're always looking for groups. It seems the popular ones are let's how quickly they become a red ocean versus a blue ocean. But we're always looking for more opportunities where we could speak to different groups and pitch them this idea of not being a slave to your 401k and your financial advisor who is always just looking out for his fee and is not a tax strategist necessarily. And so real estate offers so many great opportunities and a way to really diversify your portfolio that it's amazing how few people really know about this opportunity. Oh, you're on mute.
Okay. Let's talk about investor relations. Do you like how often are you so let's talk about the ones that are not necessarily in deals. So your general list, your general audience. How often are you communicating with them? Do you have monthly newsletter, quarterly newsletters, or anything like that?
Yeah, so what we'll do, a new investor that comes in, they'll go on a drip campaign. I think it's three emails, 3 days in a row, one email, and then it goes to every 2 weeks. And then I think it might go like 15 emails total. They'll also, so we don't like to bombard people. I've been on other email lists where it's like constantly bombarded. So we try to find this kind of middle ground. And then there also we send out two emails a month, typically, the middle of the month and the beginning of the month. When we have a deal going on, it's more focused on that, but we do like to educate investors, tell them what we're up to, what we're looking at, macroeconomics. So I have a few different topics that we will share and provide information for investors. So that's really important. We'll if we've talked to an investor and they're not ready to invest, we'll also try to connect with them like once a month, just following up. That having a regular cadence is so important because when an investor has money to invest, it's like who's on top of mind. And someone can come in who they've never met before, but they have a good conversation, and that investor may go with them. Now, you've for other investors that have been you've been working with for a while, there's that trust, and there sometimes they'll wait for you when you have a deal. It's not necessarily consistent. We did one deal last year. I would have loved to do more, but there just wasn't the deal flow and we weren't going to overpay. But there's other companies out there that bang out a deal once a month, every few weeks. It's insane. It seems like they're getting a lot of momentum because it's just a matter of deal flow. It might not be good deals. So investors have to be do their due diligence to really understand the difference between having a ton of deal flow and maybe it's some operators are a little bit more choosy.
I see. In terms of updating, so like when the updates that you send out for actual deals that your investors are in those deals, do you ever update the general list about the existing deals as well as part of the education process?
Yeah, sometimes we'll do a case study or we'll send them some general high level. Maybe it's a paragraph, maybe twice a year, but we don't do we don't do as much of a deep dive to the general public. We'll just share some basic details. And I think that's something that we can be better at too, educating people on our business execution. We're managing a lot of deals. We got a lot of balls in the air, but yeah, that's something that I think that we can do a better job at. The more educated the potential investor is, the more likely they're going to choose you when they have money ready to invest.
Have you did a survey or look into the demographics of your investors? Who are they? Are they like look at just your investor database? Are they more business owners? Are they more like physicians or something else? What are you seeing?
We haven't done a real survey, but that's a good idea. I think we run the gamut from a FedEx pilot to doctors to actors to we have a pretty popular musician from the 90s. We have other like syndicators that have done $1 billion or even $2 billion worth of deals that have invested with us.
Okay.
So it's really runs the whole gamut. I would say our avatar would be the entrepreneur because that's my background. And for busy professionals that don't have the time, I think people talk about getting into single family and focusing on that as additional income, but this is a business, and if you're not on it, there's just so many variables. I went out to lunch with a friend of mine who's looking to scale up. He has, I think, a portfolio of maybe 20 single families, and I was giving him advice on a 40 unit. He had invested with me, and I think it was like 30 points that he left on a pad. I never even thought of this. I go, this is what we do for a living. I have a team of people. It is a lot of work. And so we're trying to solve a problem for someone that wants to invest in real estate but doesn't have the time or expertise.
Okay. Let's transition to this market that we're in right now. What are you seeing in the marketplace, and then how are you positioning yourself?
Yeah, it's an interesting market and we're revving up. So we're looking to do 3 to 5 deals this year. And I would say probably do one deal in the first half of the year and the rest in the second half. And that's our goal. Who knows if we get to that or not? But it's very interesting times. You'll see a lot of conflicting data points. The job market data, it looks good. And I think they've revised it down each time after they posted it 13 times in a row, which is insane. You've seen consumer spending spike tremendously in November. Smaller banks, some we might see a bank default in the next year or in the next 6 months. Quite honestly, the Fed was backing some smaller banks that were having problems with liquidity, and that's expiring, I think, end of March. We're in an election year. So typically they lower rates. And we've heard, obviously, we've seen them talk about at one point they said 7 rate cuts. At this point, I don't see that. You've seen them as little as 3 rate cuts. I think somewhere between 3 to 5. You'll have some operators that will have to sell their deal because of the cap rate is expiring or the debt service is just way too much. But I don't see prices really go much lower. I think we're pretty bottomed out, but you'll see more deal flow start to happen in the second half of the year. So it's going to be a wild ride. Keep your head on and keep listening to really smart people out there that are putting out good content. I wouldn't watch the news because they're focused on single family. Typically, they're not market specific, but there's a lot of good information out there, and just stay on top of it and if you're going to raise capital for someone or invest with someone, everyone says they're conservative, but really make sure there's lots of buffers, lots of cash reserves, capex reserves. Don't chase IRR because it's better to be safe than sorry.
Yeah, I've seen like a lot of deals that gone wrong. I've seen a lot of them being a like a Class C type properties. Can you speak into that? Like, why do we have more Class C and maybe even lower class being much more of an issue than Class A's and B's? And then the follow-up question to that too is, does Class A's and B's, does that mean that the we should all just focus on those type properties since it's more safe and secure? Could you speak into that?
Yeah, I think you're seeing more problems in Class C because of the lack of asset management. It does take a toll on your staff. One of the deals we over 3x to investors in 20 months was a Class C. It looked nice, but we definitely had guns and some drugs on that property. At night, it would get rough, and it took a toll on staff. And so you have staff turnover, and when you have staff turnover, it takes a while to get revved back up.
Mm,
So if you're not taking care of your staff, if you're not properly managing it, it's a lot harder. As you get into B and A class, you're going to have higher end staff. You can pay a little bit more. You're going to have less staff turnover. It's easier to manage. So that's the problem with Class C. There's more money, there's more value to be made in a Class C, but that's where you see some of the struggles. And a lot of the newer operators, that's where they focus on. I focused on Class C in the beginning too. I've moved up in the food chain to Class B, where we have less of the struggles. So those beginner operators are learning as they go, just like I learned as I go. And so they're going to make more mistakes, and that's where the struggle is. And there's a lack of time and money towards asset management, and that's where you need it more. As far as and B's, A's, you just have to watch where you're investing in. There's a lot of new product coming on the market. Leasing up can be an issue right in the middle. But to me, if your market, there's opportunity everywhere in all the different asset classes. It's just really honing in on that and really knowing it versus I hear people like, oh, I want to do a deal I'm looking in Jacksonville and I'm looking in San Antonio and I'm looking in Phoenix. And it's like, that you're not going to be successful if you're all over the place. Pick a couple markets that are really close and really pick one market in the beginning, and then you can expand a little bit so that you can do it really well. This is a long game. So focus on your education, focus on broker relationships, focus on data points, and then you can expand from there.
Have you had any LP investments in deals that are in trouble now that you can, yeah.
Thankfully, no. I think my first investment, we struggled. We ended up doing pretty good. Actually, that I take that back. I invested in two new developments in Los Angeles. I don't want to be an owner, but I was a friend of mine had invested with someone, and again, he referred me to someone, and I'm like, oh, he's pretty smart and he's investing in this deal, it seems like a no brainer. During COVID, this operator had
Mm,
some personal issues and just completely dropped the ball and has continuously gotten in the way from letting us, the LPs, succeed in taking it over and finishing the project. And I've lost 100% of my money on one deal, and I will be lucky to get back maybe 50% of my investment on the other deal. And ground up development, there's a lot more risk involved, and time is a killer. And so that's just something to be aware of. And we've done a sort of ground up development deal because we bought office space, we converted to multifamily and added 60 new units to the property. So it wasn't full ground up, but our timeline was shortened to minimize risk. We're on full lease up within 2.5 years because of it was approved really quickly. We worked on there was three phases of it, so it just kept money coming in, speed of execution was key.
excuse me there. Have you had or at least heard of situations where a GP would be willing to let LPs take over the deal? Is that yeah.
We had over 70% try to vote someone out, and we had plenty of calls with a lawyer, if you could call him a lawyer, just getting in the way of just trying to. He wasn't executing on the business plan, so we were trying to take him out, and it's really really hard to get to that percentage that you'll see in the PPMs, but we had enough on one of the deals to get him out, but he stood in the way, and then and the deal it imploded.
I see. Okay. What are some of your favorite tools that you use in your business?
We try to not spend a lot of money on tools that no one's going to use or it's too complicated. We heard from Adrian earlier. We love Cashflow Portal. We've had a number of investor portals in the past, and I don't even touch it. My operations person swears by it. She's managed the other ones in the past, and I love Cashflow Portal, and that's one of the excellent tools that we use. We use Active Campaign for our emails. We have a love-hate relationship with them. There are times when we'll look at an email and it looks perfect and we send it out and we're like, what the heck happened? There's mistakes in that email that was sent. But as far as tracking, it does a lot, and they've added a lot of stuff. We used to use HubSpot and Active, but now we've gotten away from HubSpot and used Active for all of our notes and our email tracking. And we also use Google Drive, which is free, and we do a lot of asset management through that and different reporting and whatnot that we'll use and we could share within our team, and that's basically free. You don't need to have a lot of fancy software, but you do need to have some basic tools for you to be successful and grow.
I see. Very cool. So, Gary, if you were to start all over again, is there anything that you would do differently to get to where you are now, or even where you want to go?
Absolutely. Having more confidence and really being a lot more building my email list from the very beginning. I was slow to build that, and that hurt me. I think my first deal I raised $100,000. I had three investors, 35,000 each. The next deal I did a little bit better, and the next deal I did a little bit better. If I was more aggressive in building that list and posting on social media, on LinkedIn, of what I was doing and talking about it, that would have really helped my ability to raise capital much earlier. Also, getting with a group, like having a group like this is fantastic. I had joined a group early on, and that helped me change my mindset about partnering with others and going bigger. I thought I needed to do it by a 12plex and slowly show people how I'm doing it. And then maybe if I was lucky, a year or two later, buy a 20plex and then go from there. But I learned through this group, partner with others. So our first deal was a 42 unit for 1.65 million, and our second deal was a 28 unit for a little over 15 million. So partnering with others and really going to conferences and meeting your potential partners, your LPs, and really putting yourself out there is so huge. And don't rush into any partnerships. Make sure you have the same values that someone else has, the same timeline, because someone may be in a different life cycle. Maybe they're having a kid soon and they need to hold on to as much capital as possible. Or someone that just sold a business, so they've got a lot of capital to spend. So make sure you're finding someone with different skill sets. And that's the beauty of real estate too, that just because you partner with someone today doesn't mean you have to partner with them for your next deal or your deal down the road or whatnot. But finding good people, a bunch of people that you could partner with is so important, and tracking all that information. One deal might be good for someone, but the next time you have a deal, they might be busy on something else. So having a really good database and really building that out right from the beginning is so key.
I totally agree with you on both of that for sure. Awesome. All right, Gary, you have been so gracious in sharing a ton of information with us. For the people that want to reach out to you, connect with you, partner with you, invest with you, where would you like to send them?
Yeah, the best place is our website, breakofdaycapital.com. You can connect to our social media links, you can see our deals, you can get our email list. We have lots of investor tools on there. So that really is the best place. And obviously, like, subscribe, and comment on our social media posts, on our podcast, and our YouTube page. Oh, you're on mute again. Sorry.
Okay. Thank you so much for being on the show with me. Really appreciate you. Yeah, thank you so much.
Pleasure. Thank you.
Okay.